oil prices are rising as reports of an attack in Kuwait have triggered market concern over potential supply disruptions. West Texas Intermediate, WTI, crude oil futures climbed toward $88.50 per barrel on Tuesday, extending recent gains amid heightened geopolitical tensions in the Middle East. Kuwait is a key OPEC member and a major oil exporter, and any disruption to its production infrastructure could tighten global crude supply at a time when inventories are already low. The attack, if confirmed, could impact Kuwait's production capacity, which stands at around 2.7 million barrels per day. Even a temporary shutdown could have a meaningful effect on global crude markets. The immediate market reaction to the news was a sharp rise in WTI crude prices, which broke above the $88 resistance level before settling near $88.50. Brent crude, the international benchmark, also saw gains, reflecting the broader concern over regional stability and energy security. From a technical perspective, WTI's price action remains firmly bullish. The commodity has been trading in an ascending channel since early October, with higher lows and higher highs confirming the trend. The $88.50 level now acts as immediate resistance, and a breakout above $90 could open the door. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. To the next psychological barrier at $95. Key support levels sit at $86 and $84.50, and the 50-day moving average continues to trend upward, providing dynamic support. The Relative Strength Index, RSI, is currently hovering near 65, indicating a strong but not overbought market. The market's sensitivity to geopolitical events remains high, especially in regions that account for a significant share of global crude production. The attack in Kuwait, while unconfirmed by independent sources, has already triggered a risk premium in oil prices. This reflects how markets are reacting to uncertainty in a part of the world that is critical to global energy supply. The situation is being closely watched for any further developments that could impact production or exports. If the attack escalates or leads to broader instability, oil prices could see further upward pressure. On the other hand, if the situation stabilizes and production resumes without major disruption, the market may reassess the risk premium built into current prices. The next key signal to watch is whether WTI can hold above $88.50 and confirm the breakout. A sustained move above $90 would provide stronger evidence of a new uptrend, while a failure to hold key support levels could signal a reversal. Investors and traders are also monitoring the geopolitical situation for any further developments that could affect energy infrastructure or regional stability. The broader implications of this event could extend beyond oil prices, influencing investor sentiment in other commodities and asset classes. Given the interconnected nature of global markets, any major disruption in the Middle East has the potential to ripple across sectors. The current price movement is a direct reflection of that dynamic. While the immediate cause is the reported attack, the underlying factors include low global oil inventories and ongoing uncertainty in key producing. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Regions. The market is pricing in the possibility of further disruptions, even if they are not yet confirmed. This makes the current environment particularly volatile and sensitive to new information. As such, the coming days will be crucial in determining whether the price rise is a short-term spike or the start of a more sustained trend. The key takeaway is that oil prices are responding to real-time geopolitical events, and the market is factoring in the risk of further instability. The next signal to watch is whether the $88.50 level holds, and if there are any follow-up developments in Kuwait.